All right, let's jump right in. For decades, if you looked at the world's manufacturing map, there was really only one center of gravity: China. But right now, that map is being completely redrawn, and it's happening fast. Today, we are going deep on one of the biggest economic stories playing out on the global stage: India's emergence as a new industrial giant.
This isn't just a little trend or a flash in the pan. We're talking about a fundamental shift in the global industrial base. And the sources we're looking at are crystal clear on this. The really big, sophisticated investors are making a massive long-term bet on India.
So that's the big question, isn't it? That's what we're going to unpack in this explainer. What exactly do they see? What are the policies, the driving forces, and what are the risks behind this absolutely huge movement of capital?
Let's start with the hard numbers, because they really tell the story. In the last fiscal year, India brought in over $81 billion in foreign direct investment. But here's the really interesting part. Investment aimed squarely at the manufacturing sector shot up by 18%. So this isn't just talk, right? The money is actually flowing in.
So why is all this cash flooding in? Well, to get that, we actually have to look outside of India first. The initial spark for this boom wasn't lit in Delhi. It was lit in corporate boardrooms around the world, as companies realized just how risky it was to have all their eggs in one basket.
For about 30 years, let's be honest, China was the undisputed champ of manufacturing. But now it's running into some serious headwinds. Its workforce is shrinking, which is driving up labor costs, and there's a lot more geopolitical tension. At the very same time, India is catching these incredible tailwinds. So what used to be a theoretical strategy called China Plus One has now become, for many companies, a mandate for survival.
And if you want to see the future, just look at this chart. It tells the whole demographic story. On the left, you've got the median age in China, 38. And on the right, India, a full decade younger at 28. While China is getting older, India is adding 12 million people to its workforce every single year. For any manufacturer, that is a gigantic pool of labor for decades to come. But look, this story isn't just about companies getting nervous about China. It's also about India putting out a massive welcome mat. They're actively pulling companies in. So let's look at the powerful internal policies that are designed to make India just about irresistible for global manufacturers. Okay, the absolute engine driving this whole boom is something called the PLI scheme. Now, what is that? It's pretty simple. The Indian government is literally offering cash subsidies to companies just for selling more stuff that they make in the country. This program is a total game changer because it directly helps to cancel out some of the old problems of doing business in India, like, say, higher shipping costs. So how does it work? It's actually super straightforward. Step 1, you make your products in India. Step 2, you grow your sales compared to last year. Step 3, the government literally hands you a check. I mean, if you're a CFO at a global company, this changes the entire calculation on where you should build your next factory. And the big question, is it working? Well, just look at Apple. By 2025, it's expected that Apple and its partners will be shipping over $50 billion worth of iPhones made in their Indian factories. That's a huge deal. It's really the first time a super high-value, complex piece of electronics has been mass-produced at this scale outside of East Asia. You see, this PLI scheme isn't just about building a few assembly lines. It's forcing the entire supply chain to pick up and move with them. It creates what experts call an ecosystem effect. We're starting to see these specialized industrial clusters popping up for electronics, for renewables, and, this is crucial, for semiconductors. Now, the other half of the government strategy is all about tackling India's oldest, most stubborn problem: infrastructure. The Gati Shakti plan is this unbelievably ambitious $1.2 trillion project designed to fix the country's notoriously high logistics costs. And it's not just about paving more roads. It's a digital platform that coordinates everything from ports and railways to industrial parks. And the goal here is incredibly clear. They want to slash logistics costs from a crippling 14% of GDP all the way down to a globally competitive 8%. Just think about what that means for a company's bottom line. Shaving 6% off your costs is a massive, massive incentive, and we're already seeing new freight corridors cut travel times in half. When you boil it all down, though, this entire story is really a bet on people. India's huge young population is its greatest asset, but it also represents its single biggest challenge. The promise is obvious. I mean, just look at that labor cost difference.
Factory wages in India are just a fraction of what they are in China now. For companies working on thin margins, this isn't just a nice little advantage. It can be the difference between making a profit and going out of business.
But here's the peril, here's the catch. Only 5% of India's enormous workforce has any kind of formal job training. You can have millions and millions of workers, but if they don't have the skills to build modern electronics, you're stuck. This is the biggest hurdle they have to clear.
So, the really critical question is how they're trying to solve this. Well, the government is overhauling its Skill India mission to focus on modern Industry 4.0 skills, things like robotics and AI. But what's maybe even more interesting is that huge companies are stepping in themselves, building these massive worker cities, entire communities with housing and dedicated training academies to basically build the skilled workforce they need right from scratch.
Okay, but no investment this big is a sure thing. So for a really balanced picture, we have to look at the serious obstacles that could still slow down or maybe even derail this entire manufacturing boom.
The source materials really flag three major concerns for investors. First, just getting the land for these huge factories can be a bureaucratic nightmare. Second, navigating the sheer number of regulations is still a huge point of friction. And third, India's foreign policy of strategic autonomy, basically its refusal to simply align with the West, adds a layer of geopolitical complexity that investors have to think about.
So, when you put it all together, the powerful tailwinds and the very real risks, what does the future actually look like? Let's take a look at the roadmap for the rest of this decade.
The ambition here is just staggering. India has set a very clear goal to grow its manufacturing economy to $1 trillion by 2030. And because of that alignment of global trends, government policy, and infrastructure spending, this is probably the first time in history that that goal seems truly credible. And this right here is the key takeaway. This isn't really about finding a simple one-for-one replacement for China. The real story is that the world is moving away from depending on any single country for all its manufacturing. This is a big bet on a more diversified, more spread out, and ultimately a more resilient global supply chain.
So, at the end of the day, here's where we're left. For smart investors and people watching this closely, the debate has totally shifted. It's no longer a question of if India will become a global manufacturing hub. The real question now is which industries, from electric vehicles to green tech to smartphones, are going to scale the fastest and deliver the biggest returns as the world's factory finds a new home.